All right, everyone. Welcome. After a shitty price action yesterday, we are back here today. So I'm going to do a little bit of a breakdown here of what happened in the markets. So we're going to start off with the 10 that went to like around. We're going to start off with around pre-London. Now, before this move happened down, a lot of people were looking at some were looking at buys on gold right over here as we were starting to form support. People were saying, okay, we can start to go up. But the problem with price moving up from this area was that there wasn't enough range. I mean, even if you look at this candle, this is a very simple way to differentiate between a continuation candle and an exhaustion candle. So this is an exhaustion candle, and the reason how you can identify that is because this wick. Let's measure this wick. This wick is about 16, 17 pips, and if you look at the body is like around 10 pips over here. So the wick is much bigger than the body. Like the body is 50% smaller than the wick. So it's an exhaustion candle. It didn't constitute buys. Even if we look at the 15-minute time frame, we look at the 15-minute. Even if we say that okay, this 15-minute candle means the next one can go up, you have to understand that at this point the 30-minute candle is also open. And even if you're looking at buys, how big is this range? It's like a 21, 22 pip range here. So those buys were not, even if you did take buys, this candle should have made you close 50%, to be honest. Now, obviously we had the support, and then the 15-minute candle closed bearish right here, right? So now you're looking at that. Now you're keeping an eye on the time. So if we look at this candle was also the close of the 30-minute candle, and this was pre-London. So you can see how there was no volume after Asian open. Price just consolidated, candles printing side by side, move up, come down, side by side. So now you have to ask yourself a question that, okay, if we're closing bearish like this, what's the probability that the next candle can break this low and continue pushing down, right? What's the probability? There's a high probability. Also, we have clean range to the left-hand side. So if we take a look on the 30-minute candle right over here, we can see that the 30-minute candle also closed below this area, right? So if you got stuck in these buys, I don't think you saw these sells. Because if you're just saying that, okay, price is ranging and I'm only going to take a buy if we break above resistance, anticipate volume to break above all this range to the left-hand side, or I'm only going to look for sells if we kind of break below the support because we have clean range to the left-hand side, at least till, 23.45, whatever, then I guess we can have a really nice price action to continue pushing down. And that's where these sells came in. Now, the thing about these sells is this candle broke the low of the previous candle, and it made no top wick. So a lot of guys are going to say, okay, you know what, the candle didn't make any top wick. So I couldn't take a sell. But you have to understand this. Volume is your weapon. And if the candle is breaking the previous candle's low without making a top wick, that's where your stop loss can go, right? Because, if we're breaking the low and there's volume and it's pre-London and there's clean range to the left-hand side, what's the probability it's going to continue to go back up versus continue pushing down? What's the probability? That's where your answer lies, right over there, right? So I actually accidentally took buys right here. Like I was just too busy doing some stuff, so I just took buys, and yeah, it was pretty sad, but it is what it is. Now, what happened next here? We start to consolidate. This candle closed bearish. Once this candle closed bearish, the next one had to break below the low to continue pushing down. Did we break the low? We didn't break the low. And now we're basically so what ended up happening was we ended up creating a resistance right here, and price actually, right, we ended up creating a resistance and right here, and this candle closed above this resistance for a potential counter trend trade. Now, if this is going to be a counter trend trade, what's the time right over here? 12 into 1, 2, 12, 1, 2, 3, 4. This is like after London Open. For a counter trend trade, the next candle has to break above this high. We didn't break above this high. We closed like a small bearish candle. And then for price to break above this high to clean this range, we had to break above this high, which we didn't. And at the same time, now you can see that, okay, we're also creating this support here at this point, and then we formed sort of like a bullish candle. So our resistance comes up over here. We can scroll it left hand side, and from here we just this wasn't happening now. And then I sent a message in Discord about this candle closing like this. And I'm saying, well, like now it's a impulse entry, point. This is the point where you can get a very good impulse entry if the next candle breaks above the high. We got this candle breaking above the high, and now you're like, okay, if you're in an entry, it's like almost moved like 23, 25 pips. You got like a 48 pip range. This is where volume started to come in around pre-New York, and then next candle just started to push back up. I actually missed this trade, so I was like, ah, shit, okay, I missed this trade. And then what happened was they're like, okay, so I've missed this trade, right? And we formed some sort of wicks right over here. We're doing some retracement. Now let's drop down to the 15-minute time frame. Okay, so now from the bottom we moved up, no problem. And then we had some sort of a retracement happening. And then I'm like, okay, how can I get back in the trade? And once this 15-minute candle formed, right? Once this 15-minute candle formed, I wanted the next 15-minute candle to break above these wicks. And this wick is the 30-minute candle high that we were breaking for price to move up. Now, I know I've said in the past that when you have a big wick here to the left hand side for an impulse entry, that's a risky entry, but I used my experience and expertise to execute. So I executed a buy, and man, there was so much volume. This price went about, like 70 pips. I got about 51 pips out of it. I used the one lot. I used the higher lot size to make some more gains. If you look at the 15-minute time frame right here, you can see it right over here as well. I decided to break above the high. I took a buy. Volume drove price up. This was still 5, 6, 7, 8, 9 around like before NYSE open. So it played out really, really, really well. The way price moved up. So it's a little bit of a breakdown. So whenever you end your day on the charts, always make it a habit to go over price action. What happened? How could you have done things better? Was there a different time frame you could have looked at? So in my eyes, I think this was a great impulse entry scenario, which I called out as well on Discord. And then again, right over here, we had a really nice move up. So yeah, played out very, very nicely. Right now we're going to move up into slowly London close, and then we'll see how price reacts there, what happens. But ideally, if there's still volume above 2355, we should continue pushing up. If you do break below this low, I think we can fill this wick over here. But this is only for people who haven't really traded yet, So anyway, hope this helps. Take care, everyone, and we'll see you on Thursday.